Welcome back, and you're watching Commodity Champions. We will talk about the crude oil prices now, which are trading at a 27-month highs. It has been a very strong, solid rally for the crude oil prices in last 3 or 4 months, and the bullish voices only are increasing. Joining us to talk more about crude outlook now is Ms. Win Mahesh of Energy Aspects. Ms. Win, hi. It has been such a strong rally. We are just inches away from $60 per barrel as we saw in this week. What is your sense? How much of further growth are you expecting? And what are the major factors you're watching out for?
It's facing a very favorable tailwind from a few things. One, we've got balances, oil market balances that have been tightening, and now the data is sort of showing us how evident that is. We haven't seen such stock draws since 2002 and 2007. These are the 2 years in the last 25 years that we've had such strong stock draws. So it's certainly very, very constructive for market balances. The other thing as well is the geopolitical tension that sort of sparked because of what's happened in Kirkuk in Iraq. So it's a combination of these two factors, along with a third factor that came out last week in terms of China's data being very, very strong. So it's these three things that have really driven the crude market over the last few weeks.
So in the light of all three things that you just counted off, would you say 60 and beyond is then on cards for crude?
So we think this current range between 50 and 60 for this year seems fair, because we do need to understand that if we do move too quickly at the spot for oil, we do sort of bring a few troubles for the oil market. One being the backwardation becomes too strong too quickly, and then there's a lot of inventories that sort of get dumped at the spot and weighs on the market, and that's not something traders would want at this stage. They would need a gradual rise rather than a steep rise. The second thing is also on demand, and I think as much as demand has been very strong for oil, if we do see prices rise too soon, we do risk a lot of emerging market demand, especially where there's a lot of currency effect as well. Having a bit of a demand destruction as well. Again, that's if we go too soon, too quickly. So our view is that for the markets, in terms of balancing, the current price range is good with an upward trajectory. So our price forecast, for instance, is $60 a barrel over the end of the year. So we are gradually moving towards it, but we wouldn't be surprised if we see a short-term, dip lower before we sort of eventually get there. But it's not going to be a straight line, definitely, and there are lots of factors to look out for next year.
Well, that point is taken. And one of the major factors to watch out for next year would be the OPEC exit strategy. What's your sense on that? And would you say that OPEC, from where it started to where it stands right now, the execution for one has been much better?
Yeah, so OPEC's been getting better at their communication to the market now, because if you remember before, when they announced this current extension of the deal, they'd already sort of announced it to the market, signaled it beforehand, and the market reaction was very much muted. Whereas this time around, they're playing it a lot more in a better way, because they've told these producers that, or rather the traders, that there is a chance that we will extend it. They're not giving full details yet. They're saying that they will monitor market situation, market balances before they actually come to a decision in March. So I think they're doing well in terms of managing the market's expectations, and also they've signaled very clearly that after the OPEC deal is done, which is very important for the markets, that they will exit in a very good manner in terms of not flooding the market with barrels, but in a very gradual manner. So I think OPEC's doing a good job at the moment in terms of managing sentiment.
And how would you look at the U.S. shale output? Because that really seems to be plateauing. We have seen the U.S. rig count continue to decline. Do you think that's yet another positive that the markets are taking a cue from?
Yeah, so the rig counts is certainly going in the direction that you've just mentioned in terms of showing us that a plateau is happening. But we do need to remember that so many factors drive this. I mean, the rig counts that we see today are a result of investment decisions that they've made 2 or 3 months ago. So it's not like they're responding to higher prices in a very instantaneous manner. Yes, it is a lot faster than the other sources of oil, but there's still a lag.
One final question then, Ms. Menon. This leads to the demand side of it, which has been quite strong from China, and India imports actually hit a record highs for the month of September. What is your sense when it comes to India? Because this market really seems to be shining bright.
Yeah, so I was looking at India's data very closely when it came out this time round, and it did show a few very important things. One, a lot of the impact from GST that we've had has sort of faded away, so those growth numbers are sort of starting to trickle through. Gasoline's doing very well, and this is sort of reflecting the auto sales numbers as well. If you look at motorcycle sales in India, that's doing quite well. Even within the auto segment, that's very supportive in terms of demand. Diesel has had fluctuations because of the monsoon, and that'll sort of bear in terms of the next few months, in terms of what the agricultural output has been, in terms of how much diesel is used in the agricultural sector. So other than that, LPG as well, doing phenomenally well. Auto LPG is up 22% year on year, although on a small base. And that's partly to do with how GST has made auto LPG a lot more attractive compared to traditional fuels like petrol and diesel. So a lot of those factors helping India's oil demand. China as well, very strong numbers coming through, and that's adding to the Asia complex. And I'd also say the smaller countries are also sort of supporting a lot of the oil demand numbers in Asia. So it's not just India and China. Southeast Asia is doing quite well, whether it be Vietnam, Sri Lanka or Pakistan, for instance.
All right, so strong OPEC commitment, strong demand, and the US shale output plateauing is something that's good news for the crude bulls there. Ms. Menon, thank you so much for joining us with your sense on all of that sector. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.